What's up, YouTube? This is Atticus from The Complete Trade, and today we're going to take a look at Bitcoin. So this week, according to Forbes, Bitcoin overtakes silver as the second largest ETF commodity. Bitcoin ETFs have marked a significant milestone, surpassing the market cap of traditional silver ETFs in a remarkably short time frame. This highlights the growing interest and acceptance of Bitcoin as a legitimate asset class in the global financial market. Silver ETFs represent combined assets worth roughly $11 billion, whereas the Grayscale Bitcoin Trust ETF, the frontrunner for all Bitcoin ETFs, is now boasting a staggering market cap at approximately $24.8 billion. This figure not only eclipses the market cap of major silver ETFs, but also reflects investor confidence in Bitcoin as a viable investment vehicle. The recent approval of the first spot Bitcoin ETF in the United States is a landmark event in the financial sector and a once-in-a-decade occurrence, according to Eric Balchunas, an ETF analyst for Bloomberg Intelligence. It offers investors a direct exposure to Bitcoin within traditional finance. Fun fact, the first silver ETF was listed back in April 28th of 2006. It has taken the Bitcoin ETF less than 1 month to surpass the market cap of silver ETFs, which have been around since 2006. So some of you guys have been asking, where does the $175,000 price target come from? We did cover the price target in previous Bitcoin episodes, but just a quick recap, here is the long-term picture. The bear market in 2022 was the first time in Bitcoin's history where we had alternation between the Elliott wave corrections. The wave 2 retracement back in the pandemic was in the form of a sharp correction, bottoming at the blue 78.6% Fibonacci retracement, whereas the wave 4 retracement back in 2022 was in the form of an expanded flat correction, bottoming at the white 1.618 trend-based Fib extension. One method of measuring the target of a wave 5 is by taking the 1.618 Fibonacci retracement of wave 4, which lands Bitcoin at $175,000. Okay, moving into the charts, Bitcoin continued its pre-halving correction this week, dropping as much as 22% from its peak before catching a bounce. Just going over the Bitcoin pre-halving correction, every time Bitcoin tags the blue 0.75 Fibonacci trendline before the Bitcoin halving, Bitcoin has always had a correction to the downside. To summarize the corrections, in 2012, Bitcoin crashed 49%. In 2016, Bitcoin crashed 38%, and in 2019, Bitcoin crashed 71%. So far, Bitcoin has gone down 22% in 2024. Zooming into the daily time frame, you can see that Bitcoin has respected the blue 0.75 Fibonacci trendline a lot over the past few weeks. Now, the medium and long-term price targets at 30,000 and 175,000 remain unchanged. In regards to the short term, I did say in the last CleanSpark episode that we thought a bounce for crypto was on the horizon. In the short term, we don't see Bitcoin getting past $43,400 to $46,600, which is the red Fibonacci retracement resistance area. Should Bitcoin tag the blue 0.75 Fibonacci trendline again, the price would be at $43,400. We do believe Bitcoin will continue to crash lower in 2024. As stated before, we believe this pre-halving correction is going to take weeks, if not months, to play out. One way or another, Bitcoin will go down to the lower $30,000 region in 2024. Just a side note, some of you guys have been saying, why are you pushing so much positive news when you think Bitcoin is going to crash? And the answer to that question is that based on the data YouTube is giving me, you guys like watching positive crypto content. The average view duration in the last CleanSpark episode was over 4 minutes. On videos where I only post charts, the average view duration is only 1 minute and 10 seconds. The average view duration when I post positive crypto content is around 3 minutes. So clearly, I'm trying to cater to what you guys enjoy watching. Now, unfortunately, even though there is a lot of positive crypto news, I do remember saying this a few months ago. Positive news and positive comments come out at the top, and negative news and negative comments come out at the bottom. If you guys watch my Coinbase episodes, the amount of negative comments I was getting when we were pumping Coinbase stock back when Coinbase stock was under $100 was insane. But notice the recent Coinbase episodes have no negative comments. In fact, most of our recent videos have positive comments, and I appreciate that. But the point that I'm trying to get across is that the markets revolve around the charts and not the news. The fact that the media is pushing so much positive crypto content coupled with the charts leads us to believe that Bitcoin will continue to go lower and continue the pre-halving correction. Moving into some indicators, starting with the RSI, 2021 is on the right and 2024 is on the left. Ever since the beginning of December, I've been comparing what is happening today to what happened in 2021. In 2021, Coinbase shares were listed on the NASDAQ exchange. Today, the BlackRock Bitcoin ETF is listed on the NASDAQ exchange. In 2021, Tesla bought $1.5 billion worth of Bitcoin, and everyone thought Bitcoin was going to hit the moon. Fast forward to today, people believe that normal people who work 9-to-5 jobs are going to put their entire retirement accounts into Bitcoin. Put it this way, if Elon Musk and Tesla couldn't take Bitcoin to $1 million, what makes you think people who live regular lives can take Bitcoin to $1 million? Now, on the RSI indicator, similar to 2021, we have a lot of bearish divergence. In 2021, we had a dead cat bounce inside our red Fibonacci retracement resistance area before crashing into the abyss. We are anticipating the same thing today. Bitcoin will have a dead cat bounce inside our red Fibonacci retracement resistance area before crashing into the abyss. Notice that in 2021, Bitcoin traded inside the red Fibonacci retracement resistance area for a few weeks before finally crashing. This is why I've been saying it may take weeks, if not months, for Bitcoin to complete the pre-halving correction. Shifting gears to the MACD, same story with the RSI. As Bitcoin was making higher highs, the signal line and the histogram was forming lower highs. That being said, there is a bullish MACD cross on the horizon, which is why I think Bitcoin will have a dead cat bounce inside the red Fibonacci retracement resistance area that spans between $43,400 to $46,600. From there, Bitcoin should crash into the lower $30,000 region. As stated before, I have no interest in short-term trading, so even if I expect a bounce, I will not be trading it. The risk to reward is highly unfavorable, in my opinion. Shifting gears to the money flow indicator, as you can see, when the Bitcoin ETF was launched, money was leaving Bitcoin. The money flow indicator was printing a lower high. Now, back in October of last year, we had a money flow cross from red to green, indicating that money was coming into Bitcoin and the price of Bitcoin surged higher. As of today, I am waiting for the money flow to cross from green to red, which will lead Bitcoin to crash into the lower $30,000 region. Okay, taking a look at the momentum indicator, we have a buy signal on the daily time frame. Same thing happened in 2021. After the buy signal in 2021, Bitcoin pumped into the red Fibonacci retracement resistance area before crashing to 30,000. We believe the same thing will happen today. The buy signal on the daily time frame will pump Bitcoin into the red Fibonacci retracement resistance area before crashing to 30,000. Moving into Tether dominance, just a quick recap. When Tether dominance goes up, Bitcoin goes down, and when Tether dominance goes down, Bitcoin goes up. So for the past few weeks, we predicted this rally in Tether dominance, which led to Bitcoin crashing 22%. In the short term, there is a bearish shooting star pattern printing on the weekly time frame. So there is a good chance in the short term, Bitcoin will have a pump to the upside. Regardless, Tether dominance is not going to break to new yearly lows. Everything that we have said over the past few weeks still remains intact. Tether dominance is oversold on the weekly time frame for the first time in history. We have a weekly bullish Dragonfly Doji that tagged the white demand trend line as well as the critical support level at 5.24%. In 2024, we favor upside in Tether dominance, which means we favor downside in Bitcoin. Okay, let's close things off with some regression. Just a quick recap on this indicator. The red region represents Bitcoin's overvaluation, the green region represents Bitcoin's undervaluation, and the blue line represents Bitcoin's fair value. Bitcoin's fair value this week is at $37,324.11. So I've seen some pretty crazy Bitcoin predictions over the past few months, 500K in 2025 or 10K over the next few months. So first, let me quickly go over why Bitcoin isn't going to 10K. The undervalued region of the regression bands has always caught the bear market bottom, and the lower bound of the undervalued region is already at 16K. So if you are someone who is still clinging on to 10K, I have no idea what to tell you. Now, addressing some of the crazy upside targets, the upper bound of the regression bands has always caught the bull market top. and the upper bound of the overvalued region is only at 124K. Now, the regression bands will push higher every week, so eventually the upper bound will hit our $175,000 price target in 2025 or 2026. Okay, so that's my analysis on Bitcoin for this week. I hope you guys enjoyed the video, and I'll see you guys in the next one. Take care.